What's your own view on the path of rate hikes from this point on, and how is the Fed actually going to address this?
Well, the Fed's going to address it by raising rates, right? But it can't. The problem is that in all these past cycles, they could raise
Obviously.
rates, quash borrowing, and that would slow growth. But you're not going to see that. So I think you have to slow growth by basically hitting the equity market, and there's a limit to that. So yes, they're going to do 25 in March. They'll probably do
Yeah.
25 in May, and then they'll do another 25 in June, and then they'll start cutting the balance sheet. Let's see where growth is. We expect growth to slow, and the Fed doesn't want to get too far ahead of it. Now, so you have a quote they had up there earlier about the Fed's going to concede here at some point. So if they get inflation down to 2.5%, 3%, that's going to be good enough in this cycle, given all their mandates that they've had. They're not going to do enough to drive inflation back down to 2%. The cost of doing that is not a cost they're willing to bear, and that cost would be a severely weak equity market. Now, right now, they figure households are resilient enough to be able to handle a re-rating of equity prices, but you don't want to test that thesis too far.
Yeah, that's fair enough. Let's talk about what could happen next year from a policy perspective as well. Look, the criticism of the Fed is that it has been behind the curve. Others have said that the Fed now has a credibility problem too. But what about when it comes to the politics of all of this? Because on one hand, you have the impact of COVID and a stalled domestic agenda now really compounding President Biden's challenge when it comes into the midterms. 7.5% inflation, as my colleague pointed out before, zero rates, and the Fed is still buying bonds. The outlook politically for President Biden isn't looking very good right now. Would you agree?
Well, yeah. I mean, I think, first of all, the Fed's not his. They're making the call. The Fed's making its own call, right? And so this is something of their own making. It's not coming from the White House. But I think that the point that you're making is a very good one in that, and this is why there's a limit to how hard they're going to push. Because if they push that hard to get inflation down fast enough, then if they think that running in November with high inflation rate is bad, try running, the midterms with a 20% reduction in the equity market. That's going to be a lot worse. So, that's why I said the Fed, I think the natural course of things, the Fed tightening, you get down to 3% inflation, the Fed will call that a victory. And the equity markets will like that. They'll give them a chance to digest it, for earnings to catch up, and then off we go again.